So Goose, I love that concept. From your analysis as to whether it was in GFC 2008 or right now, it is a point that property prices have dropped, and I get your BHP example. My question is, looking at it now, why do you think that property prices have dropped if it is not caused by interest rates? Like, what is that?
It's a really good question. So I think that part of it is a natural part of the market cycle for Sydney. Now, if you go back and listen to anything I've said on a podcast for probably the last 2 or so years, even when Sydney was going up, I was saying, guys, the right time to buy in Sydney is probably going to be in about 5 years' time, right? That's simple. It's not now. And so I think it's actually a natural part of the cycle for Sydney. I think that Sydney had a bit of irrational exuberance, and it was not. There was no functional reason that should have been the case. And in fact, you could tell by the sales volume data, 12 months prior to any kind of price movement, you could tell by the sales volume data in broader Sydney that the market was going to go down. So the trend of the influencing factors of the Sydney market going down started at least 12 months prior to any kind of change in interest rates. So the thing about property markets is that they are very complex, and there are multiple drivers that cause markets to move in different ways. And in fact, the different drivers apply to different locations in different ways. And that's what makes it so truly fascinating, because the things that make Sydney expand or contract don't necessarily make Wagga Wagga expand or contract, right? They're quite different markets. So part of it is focus, right? So part of it is focus, right? So as I mentioned earlier, it's like, well, yeah, cool. So I think we could all agree that on aggregate, Greater Sydney prices are going down, but also you probably find that some places prices are going up in Sydney as well, right? There are some people who are still smashing and getting above their listing price, So it's not all, it's a very granular affair. But on aggregate, you can argue that Sydney has gone down. Why? There was a lot of irrational exuberance, so maybe it's a reversion to the mean to a certain degree, a settling of the market. Why? Because it's part of the cycle. It's had a very good run for a pretty significant period of time. Why? Because in actuality, the purchasing power of individuals is corroded when interest rates goes up. So this is why more expensive markets. So there's 2 tranches in more expensive markets. There's the ultra expensive markets where people don't get mortgages anyway. So typically 10 million plus, where they're just buying in cash anyway. $30 million house is bought in cash, right? So things like cost of capital don't really matter that much. But in the kind of 1 million to 10 million kind of range, thereabouts, it matters a hell of a lot. And so access for people to be able to get into properties changes when interest rates goes up, because their ability to actually get a loan changes because the buffer rate goes up. So they might not actually be able to get the finance. That reduces the buyer pool. You've got people who, so you start to then look at this like, can people buy in that market, and is it desirable with that volume of debt? So in times when consumer sentiment is good, now note that I'm referencing consumer sentiment, not economy, because the underlying economy is actually pretty bloody good, right? But when consumer sentiment is good, people perform aspirationally. So they'll try and upgrade their house, they'll buy a boat, they'll get a nice car, they'll do the thing, they'll do all the stuff. And then when consumer sentiment is low, they'll tend to defer to more cost advantageous or value-based decisions, right? So what we tend to see when consumer sentiment is lower, there is a trend towards more affordable. Now, I'm not saying cheap houses. I'm not saying everyone's going and living in $300,000 houses, but you have a trend towards affordability. And so then again, because markets are a complex affair, you can see that on a so let's say Greater Sydney, you can actually see that the areas that are more affordable will still be performing better than the areas that are less affordable, because there'll be a trend towards that direction whilst people want to stay in the vicinity of their ability to service the utility of work, keep their kids in the right school, etc. So I think there are elements of it from a natural affordability perspective. You've got to remember we've got inflation as well. And I think there are multiple factors in there. But it's not a specific factor that it's as simple as like a lever that you pull where interest rates go up and prices go down, because it's not happening everywhere. But there are some impacts in different markets. And we can actually see that through the correlation analysis. So just to kind of remind you, the strongest correlations that we saw were in the more expensive markets. Sydney so Greater Sydney, ACT, and Melbourne were the significantly the highest correlations. Why? Because they're more expensive, right? And so cost of capital matters a lot more when you're leveraging yourself up and taking on more debt. Because incomes haven't changed as much as property prices over time. So property prices have outpaced income growth. So then in that sense, the more expensive markets have significantly, in an asymmetrical way, outstripped income growth, but more affordable areas haven't necessarily done the same. And so you can kind of get this balancing effect, which is honestly why regional areas are performing so well, because you've got the disaggregation of workplaces where people can actually work from wherever they want, so they can choose to have the lifestyle they want and all of these kind of things. So societally, there's a big shift as well, which is obviously changing the game too.
Hey, fellow business owner, if this topic and value-packed short video has resonated with you at all, and you want to dive deeper into being a full stack business owner, check out the full episode by clicking the link on your screen or in the description right now.